Americans aren't chasing the American dream anymore. They're running away from it. And it all starts with the one thing every family needs, a home. Here's why millions can't afford to stay. There's a kitchen table in a small apartment outside Phoenix where a family once planned their future. They measured the space for a crib, spread out a college savings spreadsheet, and imagined a home with a backyard. The same kind of future parents have imagined in America for generations. But now those plans have a new word attached: impossible. Across the country, millions of Americans, young professionals, families, and seniors are waking up to the same harsh reality. Homeownership that once signaled stability and upward mobility is slipping out of reach. Rents are rising faster than many paychecks. Mortgage rates are stubbornly high. New construction can't keep up with demand. The result is a crisis that's not just about houses, it's about futures, roots, and choices. This is the story of how the American roof is cracking and why people are being pushed to the edge of leaving. First, let's talk numbers. The cold facts that shape decisions. Median home prices nationally remain sharply higher than pre-pandemic levels, even as sales have weakened. The National Association of Realtors reports median existing home prices that have remained elevated while inventory levels, though improving in some months, are still too tight for many buyers to find affordable options. Those high prices paired with mortgage rates that have hovered several percentage points above the record lows of 2020 to 2021 translate into monthly payments that are far higher than just a few years ago. For many first-time buyers, the math simply doesn't add up. Mortgage rates deserve special attention because they're the single fastest way a home's monthly cost can change. When 30-year fixed rates jump from 3% to 6 to 7%, monthly mortgage payments can double for the same loan amount, and that wipes out affordability for people who were budgeting based on recent past rates. Lenders tightened underwriting after the pandemic, so even buyers with decent incomes face larger down payment burdens and tougher qualification hurdles. Those dynamics push would-be buyers into the rental market, and that demand drives up rents. Forecasts from big housing analysts warn that mortgage rates are likely to remain elevated for much of the near term, keeping first-time buyers sidelined. On the rental side, the squeeze is brutal and personal. Many long-term renters report repeated rent increases, often $100, $200 per month, and many cities saw double-digit rent jumps during spikes over the last few years. That means families are choosing between paying higher rent and cutting essentials, or moving further away from jobs and schools. The Zillow renter surveys show a significant share of renters experiencing notable increases, and that pressure contributes to heightened housing insecurity.
For people living paycheck to paycheck, service workers, teachers, emergency responders, small business employees, a single rent increase can trigger a cascade of financial stress. Why can't supply fix demand? Part of the answer is simple. We haven't built enough homes for the people who need them. Home building has recovered from pandemic slowdowns, but it remains below what would be required to meet long-term demand and replace aging stock. Construction delays, rising material and labor costs, zoning limits that restrict density, and local regulatory hurdles all slow production. Census and building permit data show fluctuations. While permits and starts have ticked up in places, nationwide single-family authorization and starts have not surged enough to cure a decade-long shortage in many regions. The scarcity of new, affordable homes combined with an aging existing inventory widens the gap between supply and demand, and that gap is the price pressure cooker. These national trends play out differently across places and people. In expensive coastal metros, high wages for some coexist with runaway housing costs for many, pushing teachers, nurses, and service workers to commute hours or leave the region entirely. In smaller and mid-sized cities and many suburbs, home prices jumped during the pandemic as remote workers bid up inventory. Now those communities face affordability backlashes. In rural counties, the fastest affordability deterioration has sometimes occurred because incomes haven't kept pace with rising costs. Redfin and other local analyses show these regional variations. But the common thread is the same: housing costs rising faster than wages. The human stories are heartbreaking. A young couple in Ohio shelving plans to start a family because they can't afford a larger place. A retired teacher in California trading a Bay Area bungalow for a smaller, colder apartment out of state because property taxes and Medicare reachable costs are too high. A graphic designer moving to Canada after calculating that healthcare, rent, and a better work-life balance made emigration the more certain path to stability. These individual choices, moving across state lines or across the border, add up. When people leave, communities lose taxpayers and workers. Schools lose families. Local economies lose the vitality that comes from stable, rooted residents. Policy and market fixes exist, but are complicated and slow. Subsidies, expanded affordable housing programs, inclusionary zoning, and tax incentives for builders can help, but each requires political will and sustained funding. On the supply side, easing zoning restrictions to allow denser construction near jobs and transit could unlock massive opportunity. Yet NIMBY, not in my backyard resistance, often blocks those changes. On the demand side, programs to support down payments and first-time buyers can help some households, but they do not scale easily for millions. Meanwhile,
macroeconomic tools used to fight inflation, higher interest rates, have the side effect of keeping mortgage rates high and home purchasing out of reach for many. That creates a policy paradox. The same measures designed to stabilize the economy can deepen housing unaffordability. There are paths people are already taking to respond. Some shift to renting long-term, accepting limited space and saving aggressively. Others move to lower-cost states or to smaller cities where wages and price growth are more favorable. A visible trend is retirees or remote workers moving to Mexico, Central America, or Canada, where the cost of living, healthcare, and lifestyle can be more attractive for similar incomes. For younger Americans, immigration often isn't the story. It's internal migration or choosing urban centers where the job market justifies higher rents. But the fact that emigration is even on the table for some underlines how acute the crisis feels. So what does this mean for America's future? Housing is the backbone of economic mobility. When families can't secure stable, affordable shelter, their ability to save, to invest in education, to start businesses, and to participate in civic life weakens. Long commutes fracture community life. Overcrowded housing increases health risks. Evictions and foreclosures create trauma that affects children's outcomes for years. If policymakers, builders, employers, and communities don't coordinate faster, the ripple effects will compound, and the choice to leave will look less like an option and more like a necessity for growing numbers of Americans. And yet there's a clear silver lining if action follows diagnosis. Cities that pair zoning reform with incentives for affordable units, states that invest in workforce housing near transit corridors, and employers that offer housing support and flexible scheduling can blunt the worst pressures. Innovation in modular construction, smaller footprint accessory dwelling units, ADUs, and public-private partnerships for mixed-income developments have shown promise in pilot projects. The problem is solvable, but only if urgency matches scale. At that same kitchen table in Phoenix, the family didn't make a drastic decision that week. Instead, they started checking new listings in smaller nearby towns and recalculating budgets. They joined virtual forums about down payment assistance. They asked their employer about relocation support and began looking at cities where housing costs were less punishing. Their story is small, but it reflects a national script. People forced into hard choices, piecing together options because the larger system is failing to provide a basic, stable roof over their heads. For your YouTube audience, this is not just data, it's a moral and civic story. The housing crisis reshapes neighborhoods, politics, and who gets to stay and build a life in America. If your viewers care about schools, local businesses,